Okay, so this is part 2 of that video. I said that I would make another video kind of explaining what what this is over here. So like I said, trading is nothing more than a giant auction. Okay? There's buyers and sellers looking to transact, coming together. The reason I thought this was a good time to do it now is because the market is really dead. It's been sitting at 1539 even for about 20 minutes, and nobody's doing anything. So the number should stay the same for a little while, hopefully. Okay, so like I said before, this is the price right now of the contract. Currently, the current price of the S&P 500 futures contract is 1539. Okay, that's what the contract. If you wanted to buy, if you want to get in and buy right now, that's the price you'd have to pay, because that's what the sellers are selling it for. That's the absolute lowest price that the sellers are willing to accept. So right here on the left-hand side, you see these numbers. These numbers represent the number of contracts. Now this could be one person willing to buy 10 contracts, or this could be 10 people with one contract each. We don't know that until after the transaction takes place. This over here could be the same thing. This could be one guy or girl looking to sell 13 contracts, or 13 different people with one contract each. But basically, this is the spread. The buyers are only willing to pay $1538.75. The sellers are only willing to sell at $1539 even. So a trade will not take place until either a seller agrees to sell at this price or a buyer agrees to buy at this price. Now, there are market orders. These are limit orders, meaning this is the highest limit they're willing to accept. And this is the lowest limit they're willing to accept. Now there is a way for trades to happen without that. You, like a buyer, this button right here, if a buyer hits the market, you can get in. So if I place an order here to buy, and I'll do it down here, I'm in simulation mode, I don't want to make any fat-fingered mistakes, but let's say that I think the price is going to fall, but I'm not willing to pay this. I can put a limit order right here. Now I'm sitting in the queue waiting. If I was in real mode, if I was in my real account, you would see that change to 51. So now I'm sitting here waiting. If the price comes down to 1538.25, if a seller is willing to sell to me at that price, depending on what place I am in line, right now I'm last. So if there's enough sell orders at this price, I'll get filled. And then if the market goes up, I will make money. If it goes down, I'll lose money. But let's say I already own one of these contracts and I want to sell, but I think the price is going higher, so I want to try to make a little bit more. I'll do the same thing here. So now my order is pending. If price happens to trade up to this level and there are buyers willing to pay my price, then I'll get filled. Now, if I don't want to play around, if I don't want to wait for the market to come to my price, I can simply click this right here. If I click this, I'm already long automatically. Now I'm filled. So I am in the market. This is my price. I paid $1539. I sacrificed, since I was a buyer, I sacrificed 1 point, well basically, I'm sorry, 1 tick, which is 25.25. I sacrificed that to get into the market, because you never know. This could be the lowest price that it gets to. It could go up from here. And if I have my order sitting here, I will never get filled. And it'll just keep going up and up without me. So let's close. Now if I want to get out, you can see right here, green means long one position. So I will close that.
Order filled.
Let's say I want to sell. If I want to sell at the market, if I think the price is going down, then I'll sell.
Order filled.
Now I'm in. Now I'm in at this price. I'm already negative because this is the lowest price that somebody was willing to buy at. This is the last traded price. But this, when you sell, you're basically hitting the bids. You're saying, I don't care if this is the price, I got to get in now. So you're sacrificing a tick on this one. When I was buying, I wasn't at a loss because this is still the price. This is still the highest price that the sellers are willing to sell. So if the price doesn't move, now I'm going to already take a loss.
Order filled.
But it's fine because it's fake money right now. If I was in my normal trading account, I would not do that. So again, giant auction. That's all it is. Buyers and sellers looking to come together. People use limit orders to do this so they don't lose the tick like I just did. So if I wanted to sell, I would put my limit order right here and I would wait for a buyer to take it. A buyer to say, okay, I'll pay $15.39. Screw it. Because sometimes people come in on market orders. Trades happen when somebody comes in and says, screw it, I want to get in right now. That's probably what happened here. There was a guy, this probably was 25. And what happened was a guy, it was either 25 or it just stayed 10, and the guy was looking at it and said, well, screw it, I don't have time to wait. I want to buy 15 contracts, so I'm just going to get in right now. And he bought this price right here. It's called he hit the offer or lifted the offer. He agreed. The seller and the buyer came together. The seller said, I'm selling for $15.39. The buyer said, okay, I'll take that, and a trade happened. Now that guy's at even right now, so if this goes up 1, 2, 3 ticks, he makes money. Now just to put it into perspective as far as money, one contract traded on this is worth $12.50 a tick. Meaning, every time if I buy one contract, see right here, I don't know if you can see it, I think so. It says 1. So if I buy one contract and it goes from 39 even to 39 and a quarter, I just made $12.50 for one contract. If I buy here and it goes down to 3/4, I just lost $12.50. So each 0.25 increment, or as they call it, a tick, is worth $12.50. Now this guy right here, he bought 15 contracts. So that's $187.50 per tick. So if the price goes up one more tick to 25, he just made $187.50. If it goes down one tick, he just lost $187.50. So that's the basics of how this works. All these numbers are just basically people who want to buy and want to sell, but they're not willing to just sell it. When somebody just comes in like I did, I'm basically saying I don't have time for these games. I think the market's just going to go up. I need to get in now. I don't have time to wait, so I'm just getting in. So they just click market order. That means whatever the price is, that's what I want. I don't care what it is, just get me in. These people here are more conservative. They want to wait. They want price to come to them. I use these orders here. I don't use market orders. Because I'm not a rich hedge fund guy, I can't afford to just sacrifice a tick every time. $12.50 is not a lot of money, but when you're doing it 100 times or 1,000 times, all of a sudden that's money you're losing that you're not getting. So if I wanted to get in, I would be doing this.
Pending.
I would be waiting to get in.
Order canceled.
Or if I was selling, I would be selling here, depending on what I saw happening in the market here. I'm not going to discuss my strategy and all that, but that's basically what this is. These are traders, probably a lot of day traders like myself, a lot of proprietary traders. People use this contract. This is what they call a very thick market, meaning already today the market has only been open the overnight session has only been open for about an hour. So far, in 1 hour, there has already been over 15,000 contracts traded in 1 hour. That's what they call a thick market. Normally, how these numbers are single digits, you see right here where it says 418, and up here where it says 123 and 312. This is normally what is at all these levels. Normally the contracts up here say 400 and 400, and down here they're like 1,000, 2,000. But since all the day traders in New York and the hedge funds and all that are done for the day, the overnight session has started. They're not on here anymore. So these are mostly probably day traders and stuff like me just still trading. And a lot of foreign people overseas, because it's getting ready to be, I think, around like 4 or 5 o'clock in Arizona. It's going to start to be morning in Australia. So these people this could be Australians, banks looking to hedge against something. So this market is always open. It closes for a half an hour between 3:15 and 3:45, just so that's when they can do their settling and prices and all that, margins and all that crap. But basically it's open, I guess you could say, 23 and a half hours a day. So that's it. Any questions, let me know.